But speaking of money and of real estate, it's weird because while the commercial sector is not doing well and there's all these issues on that side, at the same time, housing affordability has never actually been worse here in the United States, especially given what's going on with interest rates. So let's go ahead and put this up there on the screen. The mortgage rate actually just this week hit a 23-year high. As Mortgage News Daily writes, quote, "Is there any hope?" And as they actually point to, we now have mortgage rates so high that we haven't seen them since 2001, near the dot-com era. I'll let you guess how exactly the price looked back 23 years ago and ask you whether it was maybe a tiny little bit affordable, even if the interest rate was high. We have not actually seen any aggregate decrease in price in real estate markets. In fact, the news just came out today, Krystal, that in 2/3 of all real estate markets, prices have never been higher for homes. So it's not that prices dropped for homes as mortgage rates continue to go sky high. It's just that they stopped growing as much as they did over the last decade or so, and in particular, the last 2 years. The underlying value, because of our lack of supply of housing, has actually not gone down. So the interest rate remains so high now that the math on some of these transactions really starts to boggle the mind. One tweet in particular put it in perspective. Let's go ahead and put this up there. Shows you. Let's say you have a new mortgage math. You have a $1 million, this guy's from San Francisco, so that's why he's using these numbers, but it applies to everybody. Say you buy a $1 million house with $200K down at a 7% rate mortgage. That's an $800,000 loan. Over the first 3 years, you will pay $193,000 on this loan, $5,322 a month. That's a lot of money. After that $193,000 of payments for your $800,000 loan, the loan now stands at $774,000 and $500. You have paid $166,000 in interest and just $25,000 in principal. So as you can see from that, Krystal, the math here is just absolutely brutal. And yeah, like I said, the guy lives in San Francisco, so the numbers are very large, but that same math applies to anybody, even if you're not taking out a jumbo mortgage, even if you're saying you're buying a $300,000 or a $400,000 house, the proportion is not going to change. You're going to be paying vast majorities of your sums in the initial years straight to the bank in interest payments because the price of the asset remains so high. I mean, really, we have never seen housing less affordable than it is right now. And then worse, not only is it not affordable, okay, 5 years, most people, they're not even barely able to put up 20%. So they're putting 5, maybe 10% down, something like that. And then 5 years from now, they have a couple of kids. They're like, hey, I want to move. And you try to sell. You got no equity in your house. You have almost nothing. Yeah. You're effectively renting it from the bank. Whenever you add on top of that, like property taxes and everything, you're renting it from the bank in the city. You've got almost nothing in this house by yourself. So that strikes at the core and the bedrock of what the American dream was supposed to be.
Yeah, it's the worst of all worlds. I just saw a report yesterday evening that home prices are ticking up again, hitting record highs in nearly 2/3 of major markets. So I'll never forget, Saagar, when we covered a poll of the number of people who were cheering for a housing market decline because they were hoping that maybe prices will come down and I'll have some shot at some point in my life at being able to become a homeowner, which, the way that we have our economy structured is like the way to build sort of stable middle-class prosperity. And it's been the exact opposite. I say it's a worst of all worlds because on the one hand, you have very low supply because a lot of people who have houses don't want to sell because they don't want to have to get a mortgage rate at the, new very high rates. You have those high rates making it so unaffordable for anyone new to get into the game as well. Then you have prices that, have remained high and now are actually ticking up. So this is a report from Black Knight that I'm looking at. They say prices grew by 0.8% in June after slowing for more than a year, pushing prices to record levels in around 60% of the nation's major housing markets. So when you consider very high mortgage rates and record high prices, it's just a disaster for anyone who ever aspires to be able to get into this market. And then you pair it with the last story about all of these landlords that are under financial pressure also because of the rates, and they're trying to hike rents So renters are getting screwed as well because of that scenario. Housing is this underlying issue that I think gets far too little attention in Washington, but is one of the most important factors in people's quality of life.
Yeah, I think you're absolutely right. We have to continue to stay on top of it. This is one of those where, we hear from everybody, and it's downstream of a lot of things. When you got no property, that means you have no real equity, in terms of society. A lot of it drives political participation. Permanent rentier class is one of the things that we've always striven to make sure that we avoid here in the United States. It has all kinds of social downstream terrible effects, really. And then it really is the number one way to accumulate any sort of intergenerational wealth over the years. It's one of the most important economic markers. I'm not saying things should work this way, but that is just the way it is. If you're going to deny that to the entire new generation, don't be surprised what comes down the pipeline. So we'll continue to keep an eye.
Hey guys, if you like that video, go to breakingpoints.com, become a premium subscriber, and help us build the best independent media organization on the planet.
That's right. We're subscriber funded. We're building something new. We want to replace these failing mainstream media organizations.
So again, to subscribe, it's breakingpoints.com.